Hello, and welcome to Beyond the Deal, where we discuss business, entrepreneurship, and commercial real estate. My name is Lacey Labs, and I'm here with my co-host, Laura Martin. In today's episode, we interview Michael Watson, director of SVN Vanguard in Los Angeles. Watson has worked in commercial real estate for going on 10 years and specializes in distressed properties and asset management. He leads the development of comprehensive collateral intelligence reports for distressed real estate assets, delivering critical value assessments to large banks, financial institutions, and GSEs, special situations teams. He's also pursuing his MBA at USC. Tune into this episode to hear more about Watson's journey, the commercial real estate experience that he shares, and what advice he would give to financial professionals working in distressed assets, or to younger CRE agents looking to provide value to those types of companies. Michael Watson, welcome to Beyond the Deal. It's so great to have you with us today.
I'm happy to be here. Thank you, ladies.
Yeah, absolutely. So we'd love to hear a little bit about your story. So tell us about yourself, your background. We know you went to Ohio State, which is around here is Penn State territory. So that'd be, you'd be getting some booze and some...
Not from us.
Not from us. No, not from us. Not ever. No. But you got your background is in accounting and finance. So your degree is in not commercial real estate, right? But you worked that into commercial real estate. So just tell us a little bit of that story, how you got started, what drew you into it, and how you landed where you are.
That's correct. Yes. So I'm from Ohio. I was born and raised in Columbus, Ohio. I love my Nittany Lion brethren and sisters. So I come in peace. Notwithstanding the overly egregious national championship background. I guess I better change that soon, or else I'm gonna get kicked off this podcast.
No.
But yes, I was born and raised in Columbus, Ohio. Ohio State was really a couple of miles down the road from my house, and my mom went to Ohio State. I have fond memories early in my life of, watching, the football team, with my mom. And for me, it's not necessarily that, I have like an affinity for the team. Of course, it's a sports team. But, for me, it's like, that's just associated with, just fond memories of, me as a child. And, my mom, going to Ohio State and instilling, the importance of education and getting your education, and that as a way to really elevate yourself in life. And so for me, I'd always, really dreamed of going to the school. And not only, was it very close, but it's a pretty good academic institution with an okay football team. The basketball team, we'll have to talk about that. But women's basketball team is amazing. And, I started there when I was, fresh out of high school, 18, and going to classes at Ohio State. I lived in one of the towers. It's like right outside the football stadium. And, I remember going to games, finally, being able to go to games and sitting in the student section, was a dream to me. But, as I progressed in my academic journey and I started to explore, okay, what exactly do I want to get into? What do I have a talent for? And I found out that, I've got a talent for not only numbers, but also just a talent for really engaging with other people and getting people to come together as a team and, go towards, one singular goal. So I realized that, okay, if I'm going to do that, that's got to be somewhere in business. I do have sort of a mind for numbers. They're comfortable to me. People sometimes, I guess, at the first part of my career, the people aspect of it, was harder in a sense. But being at Ohio State and in that community really kind of got me out of my social bubble. So to speak, or my own individual bubble. But, I guess what I'm trying to say is that, I really, gravitated towards, the business aspect of the school. So I studied accounting and finance, and I liked how the numbers can tell a story. And I liked how numbers can tell you, whether a business is doing well, whether a business needs work, and what aspects of a business can you change just by looking at what's going on with the numbers? And the more that I learned about that, the more that I started to see like, okay, there's careers in this. And the careers that were hiring at the time, I went into school in 2007, 2008, which was right around the time of the great financial crisis. And, I'd seen it as something on the news and, something that we academically studied. And it seemed like, job opportunities at that time, when I first got into school were few and far between. Now, when I graduated around 2011, 2012, it started to open up. But really, the jobs that were the most available for me were at public accounting firms. And my first internship was with Ernst & Young. And I worked, well, they're EY now. But they had openings in Columbus, Ohio. They had openings in New York, and they had openings in the DC office. And Columbus, Ohio was awesome. I did my internship out there. The problem is one of the biggest clients at the time was White Castles. They make these little hamburgers that are absolutely delicious. That's also a problem because the test kitchen for White Castles is like right underneath like where the auditors sit. So I must have gained like 25 pounds during one internship. And I realized like, okay, I probably can't do this. And then, because I had to get my CPA license, I needed to essentially have so many credits. So I also took a bunch of elective finance classes. And I thought that the world of, finance with respect to derivatives contracts, bonds, stock portfolios, things like that was absolutely fascinating. So I wondered if there's a way that, I can combine, my studies for accounting and my knowledge of accounting with, the financial world. So they had an opening in the DC office for the financial services division. And I worked out there in DC in the financial services division. My clients were Guggenheim and a number of other private equity firms up and down the DMV, DC, Maryland, Virginia area. And I got an opportunity after, a couple of years out there to work in Los Angeles at Bank of New York Mellon. And again, public accounting, CPA, that was awesome. And I learned a ton. And then I get this opportunity to not have to shovel snow off of my windshield at 5 o'clock in the morning. I'm sorry, ladies. I couldn't do it anymore.
I only shoveled once this winter, I'm just going to say.
Yes. I have. Although, when I got out to California, I realized like, the snow is the least of your worries because, in California, although, we have the Dodgers, we have things called, wildfires and earthquakes. And I remember the first time I sat through an earthquake, I didn't know what was going on. I was like, did a truck hit the building? And like, why is this building shaking? And like, I'm like, and I remember, the first time I was in the office and, my teammates were just like, I got up and I'm like looking like a gopher, like above the cubicles, like what is going on? And, everyone else is just calmly like at their desk, like doing whatever, like, oh, Watson, it's just an earthquake. Like, don't worry about it. So I quickly had to get used to that. But, at working at Bank of New York Mellon was interesting because that was sort of my first introduction to the world of commercial real estate finance. So what I did there primarily was I worked on the mezz debt team that essentially kept the books. We were a fund admin. So think about it as like mercenary accountants. We were mercenary accountants for a bunch of mezz debt and private equity funds. And I could see like, oh, okay, like here's the inner workings under the hood, the financial mechanisms of how, paid in kind interest is calculated and how carried interest is calculated, how, the various like return waterfalls are constructed and calculated. And again, as an Excel nerd, I felt like that was awesome. I was in Wonderland. And a buddy of mine at the office left and went to work for a company called Colony Capital. And he pulled me in one day and was like, hey, like we've got some positions open. You should come out and apply. So I did that. And, working at Colony was really cool because, they're a firm that started by a billionaire, a man named Tom Barrick. And he essentially, really came up it was earlier than that, but, when Colony really expanded was in the early 90s. And after the savings and loans crisis, working with the RTC to purchase loans, take them in-house, work those loans out, work those distressed assets out, and then either repackage them and sell them to other banks, or, work with the collateral to try to implement various value add strategies. And then his company did it again after the great financial crisis, buying up a bunch of pools of FDIC loans, working those out in-house. And that's where I found out that, oh, there's a whole sort of area of finance where you can buy and sell loans. Oh, you can work these loans out. Oh, these things aren't sort of like set in stone. They're not owned by one bank. They're traded amongst banks, and they're securitized in these CMBS securities. And then, oh, you can, rehypothecate collateral and all these other mechanisms. And it was like this completely different world that opened up to me that was almost like, okay, I can use my knowledge of accounting and finance to understand the underlying mechanisms of it. But then there's this whole other aspect of it that you need to work on, which is how do you get a bunch of people to agree on something and put one of those financial calculations or mechanisms in effect. And I worked there. I learned a bunch about workouts. And then so at this job, we would have to essentially maintain like a massive spreadsheet and database of all these different brokers across the country, because you couldn't rely on one person. Real estate is a block by block, building by building business, and in order to get the most out of that property, like you have to have a trusted advisor, someone that has been in the market, that understands the comps, understands the owners of the building, understands the tenants, understands the demographics of the area. So we'd have essentially we'd have to maintain like this massive database of all these brokers to go to. And then this one guy comes in from this little brokerage called SVN, and his name's Tony. And Tony's like, hey, listen, you don't have to maintain this massive spreadsheet of these brokers. You can just come to me. I know all of them on a first name basis. I'll be your single point of contact. I'll report back to you, fairly frequently. And if you have any issues, we'll take care of it together. I'll essentially be on your side. And that was really the one time where, the broker acted like in a co-owner in the property with us. Like, the broker acted like a real trusted advisor. And I found out later that, hey, like this person, he has an opening for sort of, a second in command or a chief of staff. And so, my boss at the time, takes me out to golf, and, he invites Tony along. And, we're playing golf, and like halfway through, he's like, how do you like this guy? What do you think about him? I'm like, yeah, he's pretty cool. Like, we like working with him, this and that. And he's like, hey, he's got sort of an opportunity for you. And, if you're a little bit older, I was like 26, 27 at the time. He's like, if you're a little bit older and established, I'd probably tell you, stick with this, stay in corporate, but you kind of have an opportunity to start something and grow. And these opportunities come along once in a while. And this is a mentor of mine that honestly, he and I keep in touch, still to this day, very regularly. But, I really appreciate him for that, because he's like, hey, you should go for this opportunity, like interview for it, see if it works out. I think you'll do well at it. And, really, I've been doing that took that job, and I've been doing this for the last 7 years and haven't regretted a day of it. Really, it's been, one of the best experiences of my life.
Yeah.
So, that's amazing.
That's kind of, how I got here.
It's amazing your boss encouraged you to do that, because that was going to be pain to him if you left.
Yeah, that's okay. We still kept in contact. Yeah. We still worked together. We were still working out the Colony deals up until, Colony sold their industrial portfolio to Fortress. And then they spun out into Bright Spire. So, that business was sort of winding down. We had, essentially worked out almost all the stuff from 2011, 2012 by then. This was like 2017. So I think, I didn't know it at the time, but like now I see it like, oh, okay, he kind of saw the writing on the wall. Like he was kind of, helping me take the next step in my career. And, that's really something that, I take with me to this day, is that, really it's not taking a selfish approach and like looking at my team as, their own individuals. And like, if you care about people as individuals and kind of like put yourself and your own interests aside and you help people, like that's how we were talking about developing relationships earlier. That's how you develop those real bonds with human beings. So, I appreciate him for that. And again, we still communicate, to this day. His daughter's softball team, he keeps me updated very regularly.
That's good.
Love it. So I think you kind of answered our second question with that, which is kind of how did you niche into these distressed properties and what kind of drew you into it? So if there's any more to that, like, was there something about Tony or the work he was doing? You said you really liked working on the commercial real estate side when you were at the bank, on the bank side of it. So what kind of drew you into it and just opened it up for you that you're like, yeah, this is where I'm going to be for sure?
Yeah, I would say it's something that is a niche that not a lot of people do. That, to be quite honest with you, it's very difficult because each situation is very different. Like we talked about, each piece of real estate is a block by block, business by business type deal. With distressed assets, it's a loan by loan, really situation by situation business. They're all different. It's very unpredictable. It really stretches your creativity, your knowledge, your network. You have to run as fast as you can in order to keep up, and you have to be on point. There's no room for complacency. It's really the hardest thing that I've done. So, that's really what drew me to it. It's just like, it's each thing is different. Each thing is fascinating. Each thing is, really pushing me to my limits. And like, that's what I want, because like, look, I know, this is just business and this is just like numbers on a piece of paper, but, this is sort of, I treat it like my craft. And for me, I realize that, and especially as I get older and I go through, various life events, I'm finding that, life is short, and I want to be the best that I can, no matter what I do. If I'm, if I'm sweeping the street, or if I'm, out in the hills of Los Angeles, like fighting fires, like I'm not tough enough to do that. But if I was, I would do the best at it. But, this is sort of the avenue that, the at least professional avenue that life has given me. So heck, I want to do it to the best of my ability.
Well, and you guys do broker opinion of values nationwide. And at one time you have dozens and dozens of them going. So that's a lot to manage. Making sure they're accurate and deadlines and tracking down.
We have, you're exactly right, Laura. We have, at any given time, we probably got, 30 broker price opinions in the hopper at one time. And at times we get orders for over, hundreds of assets. We've valued over $1 billion of commercial real estate in only, in the past, I'd say about 9 months. And throughout the course of a year, we'll do over 500 different BPOs. And it is a lot. And the way to manage it for me is just to communicate with my team, not only with my direct team that's assisted me with creating these BPOs, shout out to Shelly, but really it's communicating with the local teams. And it's not that I'm coming to you and I'm like, oh, put this number on this piece of paper, go to this property and take this photo. It's I'm communicating to you, hey, here's the client. Here's our context with this client. Here's our goals, what we're trying to accomplish with this client. And then with this particular situation, here's all the context behind this. And here's where I think that we can add value. And here's what I think the end goal is. So, hey, while you're putting this report in mind, again, do the report obviously to the best of your ability, but keep in mind, here's really what we're trying to go after. And communicating the why, I feel, is really beneficial because it gets that buy-in from not only my team, but on the teams like Laura and others all across the country that we really rely on and couldn't do this without.
Yeah. So I benefit from sitting next to our research analyst, Devin Heisler, and he is the one in our office who's usually digging into these. So it's fun. I get to kind of see it, not in it, but just that front row, like watching sometimes as he's digging into these properties. And I know we've really appreciated at times how much detail you give us. It really helps us to look at the property from a very informed perspective. I know Devin specifically has said, like, man, it is really helpful. So tell us a little bit more about getting a little more maybe of like a 10,000 foot view of the process rather than not so much down in the weeds of it. But what is the process that you have when you get these BPOs? Because you get hundreds of them, thousands of them, billions of dollars worth. What is the process you have that you do to fulfill those? And how does the SVN network bring value to that?
Yeah, that's a great question. I would say the process for that, it really depends on the client, right? We have different cadences with different clients. Some are more of a machination than others. Some will, we have a process in place where it's a form, it's a template, it's more or less automated. We know, when they're going to send it to us. We have a special inbox that's set up, and it immediately pings us, when something comes in on our internal messaging platform. And then we know, okay, time to huddle up, time to figure out who's the best team across the country to work on this. But what it looks like is, I'll give you a couple of examples. A couple of our bigger clients, they'll send them over in a big batch, and it'll be a massive spreadsheet with a bunch of addresses. And what my team will do is we'll take those addresses. We will, we have a program that we use that, puts those addresses, superimposes those on a map, and then superimposes those next to the offices that we work the most with and the radiuses with which those offices operate. And we, create a new column that identifies, here's who we want to reach out to. Here's the managing director in this office. We also keep detailed records of past BPOs that we've done. I mean, we've done thousands of them. And, this is a conversation that, I don't want to go down the rabbit hole, but, we're big on collecting and analyzing data and making the most use of it. I'm a proponent that data is the real estate of the future. But again, that's a conversation for a totally different podcast. I digress. So we'll identify, who's the best for each particular report. And then, we'll reach out via email or via phone call. And just what I was talking about, we'll explain, here's what's going on. Here's the context. And, here's what we need to get done and by when. And, oh, hey, if you need more time, just let us know in advance. Again, here's that communication so that we can communicate with our client. Hey, we might need a little bit more time on this because X, Y, Z is going on. And it's not a bad thing. They appreciate it. Again, as long as we communicate ahead of time. And then with respect to some of the more, let's call it bespoke reports or emergency reports, we'll get calls, sometimes at, 10, 11 o'clock at night from a panicked client that's like, hey, I need, we need this done in a week. Okay, here's what's going on. Here's the problem. Oh, wow. Yeah, this definitely is an emergency. You need help. At which case, we'll sort of, scramble the SWAT team to help out. But in a nutshell, that's kind of how it works.
Okay. So you rely really heavily on the network in order to execute those. You utilize teams and offices all over the country pretty much every day.
Yep.
Yeah.
Absolutely.
Yeah. So
I'm sorry, I was going to say, when you get listings, you refer them out, like the one we did in York, Pennsylvania.
Yeah.
That's correct.
Yeah.
It's imperative that we have this network of trusted advisors at SVN all across the country. And SVN's got such a great coverage, not only in the primary markets, but in the secondary and quote unquote tertiary markets that a lot of these distressed assets are in. And you're exactly right. We do refer out, and that's because, again, I'm just some guy that, sits in Los Angeles and watches the Dodgers. I don't have a real estate license in, for instance, York, Pennsylvania. Even if I did, I wouldn't know where the heck to start. I wouldn't know the buyers in that market. I wouldn't know who bought and who sold what. If I tried to do that myself, I would just be doing a complete disservice to my client. And, that's when you talk about reputational damage. So, for me, it's just as important to find the right partner in the right markets to work with. Just like, Laura and her team, we know that, Laura knows people in the market. Laura knows who the buyers are, who the sellers are. Laura knows, who bought what around the corner. If for our clients, understanding who their borrower, who their sponsor is, a lot of times the local teams will have prior experience with a certain borrower or a certain sponsor. And we'll get the asset managers at these banks on the phone with our teams a lot of times if our teams have some sort of information that, would be valuable to this particular client. So there's no way that, we could do what we do and our clients would be as successful as they are with, working out these distressed assets without the vast network of intelligent, experienced, trusted advisors that we have here at SVN.
Have you seen an increase in distressed assets with, interest rates and post-COVID? And have you seen a bump in what's coming through your office?
Yeah, that's a great question, Laura. We absolutely have. And it's all over the place. And the reasons for it are mostly varied. You have the macro reasons, which are, of course, interest rates and economic uncertainty in general, let's call it, both structural, economic, and politically driven. There's also the regional sort of, I like to call them mini macro issues where, think about obviously interest rates. That interest rates, economic, political, like that's nationwide, almost global. And then you think about, in nationwide and even more specific, we're seeing a massive increase in the cost of insurance. That's if you can even get it. And specifically with respect to California, I'm sure you've all seen, what's been going on with the wildfires. I live south of Pasadena. I remember, last month, basically, or a couple months ago, the mountain behind my house was like on fire. And I remember, a couple months before that, insurance premiums were skyrocketing. And that's if you could even get a policy, right? So that's absolutely affecting commercial properties as well. Not only the cost of insurance, but the availability or the appetite of these insurance companies for that particular product in these markets. And we're not only seeing it, in California specifically, you're also seeing issues that are isolated to, areas like New York with the changing in rent control laws. You see issues that are isolated to specifically like Miami Beach, for instance, with what's happening specifically with local ordinances surrounding building codes and, condos and, these special assessments that are being levied to bring these buildings up to the new codes so that they're actually safe for people to be in. And that's materially affecting the real estate markets out there. So, and then, you drill down even further, you look at some markets where there's an influx of people into, right? Where there's mass migration into markets, people looking for jobs, people, escaping, the high cost of living in some areas and going for a relatively lower cost of living in other areas. I'm thinking about places like Atlanta and places like San Antonio, where you have like 1950s, 1960s vintage, I can't say that word today, vintage multifamily housing that skyrockets in value, which then causes a reaction of new builders that, start building projects. And then these new building projects come online. And then, these existing product that, is essentially like functionally obsolescent, they're essentially losing tenants to these new units that are coming online that are undercutting them in price. And there's so much that's going on. You can't really point to one thing, but you see a pattern in that it's large macro events, sort of mini regional micro macro events. And then within these individual markets, there's a constant flow of these mini micro events that are affecting things. And really, a lot of it is the natural cycle of just, real estate peaks and troughs. It's just what's going to happen. It's the circle of life. With respect to commercial real estate, shout out Mufasa. But
I think you should change your screensaver.
It's also and then with respect to distressed assets, of course you get into that borrower risk as well. Companies and entities that are aggressively underwriting these assets and leveraging these assets in a low interest rate environment, and goodness forbid that it's a floating rate, and now your rate cap is burned off, and you're paying sometimes double digits for these assets. And not to mention, again, your insurance is skyrocketed 3x. So now, that even if you're especially if your underwriting was aggressive and you were, underwriting to relatively razor thin margins and expecting, takeout financing in a couple of years at that same rate. Well, that takeout financing isn't the same as what it was in 2021, 2022. So, now you're seeing a lot of that as well. So I guess there's a long-winded way, ladies, to answer your question. What am I seeing? That's it.
No, that was super helpful. So as those things are all kind of playing out now, okay, so the default happens, you guys, it kind of comes across your desk, your clients reach out, we have these assets. How do they handle them? Or when they're dealing with a real estate asset from a defaulted loan, do they generally focus on just recovering the finances that they're out, like making up the loan amount and just making sure that they come out even? Or do these banks or financial institutions try to make a profit? Do they get entrepreneurial in their management of them? How does that kind of play out on after the asset's already defaulted and they're dealing with it?
Wow, that's a great question. And I'm going to answer it, and I'm going to be honest. I do need to state I am not a lawyer, and anything that I say from here on is not to be construed as legal advice.
Yep.
And the reason why I say that is because every single jurisdiction, has, different ways of handling these things. And I'm just going to speak in general. So in general, what I typically see is that these financial institutions right now are simply trying to be made whole. They just want to make their capital, and that's it. Or get their capital back, and that's it. Now there's fringe cases that I hope we have time to get into, and maybe I'll do that. But I would say, oh wow, that's such a great question. Okay, so I'll speak broadly first. So broadly, yes, they're just trying to be made whole, and really what they want to do is analyze, like, okay, they kind of have a few different options. They can either sell the loan to another bank. They can foreclose on the underlying real estate, which, depending on a number of factors, could carry with it some risk of or some liability risk, because essentially when you foreclose, the bank is now on that chain of title, right? So if there's anything that's encumbering that, they could run into issues down the road. We're seeing an uptick in what's called a receivership, which is a strategy that I would like to see more often, simply because, yes, it's a little more costly. But what a receiver is essentially a buffer between the bank and, taking title, or the financial institution or the lender and taking title. A receiver is sort of, a third party arm of the court. You might have to put like a disclaimer in here that like explains like exactly what this is. I don't want to go into too much detail because it can get quite lengthy in legalese. But essentially, a receiver is a third party arm of the court that is supposed to act in the best interest of the property, to prevent waste and to make sure that it's being utilized to its highest and best use. So they can get a receiver installed. They can do what's called a deed in lieu, where they essentially just like negotiate with that borrower and give and take some terms in exchange for foregoing the foreclosure process. They call it a deed in lieu of foreclosure, where it's essentially like you may have heard like the borrower just hands back the keys to the lender. That's essentially just like a nice way of saying like, hey, this is a deed in lieu. So there's a number of ways that they can do that. And if they do wind up taking the asset back, they then have the choice or decision of whether or not to engage in some sort of value add strategy, whether it's some sort of TI packages to get tenants in, and this is where the expertise of the local broker comes in, is because we really leverage the local team to help us come up with these value add strategies that could, for instance, if the value of the property is underwater relative to the loan, and there's an avenue where the lender can put a little bit of money in, and again, let's call it like resurface the parking lot, or clean up the facade, and attract new tenants. Engage in some sort of lease up program to increase the value of that property back to what they're owed. Because, and this is sort of where my legal disclaimer at the beginning of this came in, was that let's say, the bank was able to sell the asset for the most part. If the bank was able to sell the asset for more than what it's worth, they're not really incentivized to do that because that equity goes right back to the borrower. They're not entitled to that. Right. So really, the only time that we would see them engaging in this value add strategy is not to make a profit. It's really just because that loan is underwater and they're trying to bring it back up to par, more or less. Gotcha. That was a long-winded way to answer your question, but I wanted to be as thorough as possible.
No,
My guess
great.
is that's rare, though, right? That the banks want to engage in that kind of plan of trying to upgrade the property, put more money into it to try to get their loan amount out. I don't see that much, but do you? It depends on the bank.
That's a really great point, Laura. And the reason why we don't see it too much is because unless, for instance, we just try to use a generalization that unless you're going to put in $1 to make $3, it might not be worth it, right? It might just be better for you to book the loss, put it against quarterly earnings for this quarter, write the property down to what the as is value is. Mm-hmm. And then sell it to someone else in the market who is willing to take on that risk of value add.
Right. Mm-hmm.
Really, the only time that we would see, the value add play is if it's really, really underwater and there's an opportunity for the bank or the lender to put in $1 to make $3.
Yeah.
So to answer your question, you're exactly right, Laura. It's very rare. Yeah. But we just done so many. We typically see 1 or 2 a year.
Yeah, I'd agree.
Yeah. Okay. Yeah. So not common. Yeah. Mm-hmm. Fascinating. I definitely am learning a lot.
I too.
It's a very niche process, but there's a lot to it. So you've been in this for, I think I saw where you're in the 8-year range working with Tony and his team, right? So what are you excited about for the future of your team and for you? And what are your goals in business in this stage?
Yeah, wow. You ladies are not kidding around. You come through punching with the amazing questions. Oh man.
That's
okay.
Lacey.
you ladies are awesome. I would, if I can be, bluntly honest, I think where this particular industry is headed with respect to distressed assets and distressed asset workouts, based on what I'm seeing on a macro scale with the moves that are being made and the rumblings behind the scenes and the conversations in the green rooms at the conferences, I see that there's a lot more distress headed for the horizon. I'm a big fan of Ray Dalio, and he speaks, very, broad, long-term, peaks and cycles, and really Howard Marks too is like this. And of course, the person that I work for at Colony Capital that, is very respected, Tom Barrick sees things like this as well. I see that we are exiting a very, very aggressive cycle. And now we're headed into a constrictive cycle. And this particular industry that I'm in with respect to distressed assets and distressed assets workout, it's very much a negative beta industry in a sense that, we really pick up as other things sort of, slow down. Right. So I see that we're entering a period where a lot of the bases that were set at inflated asset prices are going to be reset. And I see a lot of growth in the need for the services that my team provides. I can't tell you when or how or where, but I'm staying exactly where I am. I'm trying to make sure that my team is nimble and scalable, and we can take advantage of this opportunity that really comes along, once in a career.
Yeah.
Mm-hmm. Yeah. So I didn't put this question in the formal questions, but I'm curious, looking at those goals and at that future and staying where you are, what's the motivation for getting this MBA from USC?
It's funny. I was telling Laura this, and I'll put myself on blast. I've been described by very close friends and confidants that, Watson, you're an introvert that pretends to be an extrovert. And I'm like, yeah, I think that's pretty accurate. I very much am, comfortable in the numbers. I'm comfortable, sort of like doing the work. And, very early on in my career, and then even early in my career with Tony, it was, very much, head down, do the work, get everything done, behind the scenes. And, that's where I'm comfortable. But then as I'm growing as a human being and, I'm experiencing life, I'm seeing, like I said earlier, that, life is short, and I want to be the best human that I can be. And I want to continue to grow. And I feel like and I know I'm kind of getting away from the numbers and into the esoteric, but, that is really what I, as a human being, aspire to, is to grow and to change and to do different things and to be better every day. And I'm finding that in my career, okay, I'm sort of evolving from someone that is behind the scenes, that's, in the little cubicle, that's doing their thing, to, actually, being out and engaging with clients and leading a team and figuring out how to get a bunch of different people on a bunch of different geographies, and even my own team that, works with me, like how to put all of these people together and to align them towards one goal. That's not something that's really found in a spreadsheet. That's something that is going to need, really leadership. And for me, I see the people that are in the places that I want to be. And to, further answer your question, sort of as a segue into what I'm going to talk about to answer this question, is that I see that, it's almost like, I'm going from, like I said, that area of the economy, or we're kind of going from this area of the economy where there's going to be a lot more of a demand for my services and our services. And I feel like we really are in a position in this particular niche line of business to be the best in the country. And there's a lot of competitors, and they're really big and they're really well capitalized, but I think we can stack up with any one of them. And I see the people that are in sort of, let's call it, 10, 15 years down the road where I am. And, even the people that I've worked with, they've gotten their MBA at some point. And I was super scared of it, but, I looked at, different programs, and, really the MBA program that I'm at USC, I saw that they're about, okay, yes, we're going to teach you, how to put together a DCF, and, how to analyze a merger and acquisition, and how to put together a marketing deck. Yes. But the underlying theme of the entire program is how to mold you into, or how to help you mold yourself into being a leader, how to, mold you into being a leader that develops a team and elicits buy-in from people and makes a bunch of individuals greater than the sum of their individual parts. And that's kind of where I see this going, is that, okay, if we're going to stack up against these massive companies, if what I believe is that, we can be an industry leader in this particular niche, that's going to take me sort of elevating myself and getting outside of my comfort zone and really growing, not only as a human being, but as an executive and as a leader. And that was really the impetus for doing this. And so far, it's really it's been one of the hardest things that I've done, because, it's sort of the executive program. So it's like night school almost. So, I'm staying up late and studying at night and on, Zoom calls and Zoom meetings with my team, trying to get cases together. And then, presenting in class and going to class on like Saturdays. And then during the day, I still have a pretty demanding day job. So, and still doing that. But to be honest, it's one of the best things that I think I've done so far. And I think it'll pay dividends down the road.
Yeah.
I hope so.
Yeah, absolutely. Thanks for sharing that. That's helpful.
You bet.
So we have two questions to wrap up our time together. The first, they're both kind of about your experience and insights. The first one is, What piece of advice would you give to a new agent who's looking to get into this distressed properties and working with financial institutes kind of niche, whether it's in your team or whether it's, really focusing in on being one of those teams that you reach out to and being the go-to guy on that team and just looking at this and saying, how do I approach it? What tools do I need in my tool belt to do this well? What advice would you give?
Oh, wow. I would say to really be completely honest, model Laura. You really have to know your stuff like she does. You really have to know your market like she does. You've got to know the ins and outs of who, like I said, who's buying what, who's not buying what. Do you know, tenants and what are the tenants saying about their landlord? Like, is there excess deferred maintenance? Things like that, are usually, little clues that a property, hey, it may be distressed and, a lender might be taking this over soon. So if I can give any advice, it would be to really just know your market inside and out, and not only just like the properties and the geography, but, it's not just properties that make this. Like it's human beings, it's people, it's businesses, it's tenants, it's, renters, it's, understanding not only like the geographic and the financial aspect of it, but really get to know the people that are in your market and develop your network. Because you'll hear things that, may really benefit you. Because, this is, again, I hear it all the time. Stuff that because we work with an advisor in the market that knows things that are that no one else really know unless you're, at the Rotary Club or, at Toastmasters, and you have these conversations like on the golf course or whatever, that really kind of set us apart. So to answer your question, any advice would be really just know your market inside and out. And I feel like even if that's not, doesn't help you with distressed assets, like, shoot, that'll help you with pretty much anything.
Yeah, for sure. Good advice. All right. Our closer question. For all of our time of being on a show, we have asked this question to every single person. So if you could go back and start your career over, but maintain all the knowledge and experiences that you've had while doing this, what is something you would do differently?
Oh, wow. I'm going to need my emotional support alpacas for this one. Ladies, what do you say? Okay. If I could go back knowing what I know now, it would be that I would say a couple of things. Number one, this is something I wish I would have figured out earlier. Do not be afraid to step outside of your comfort zone. As a matter of fact, really embrace stepping outside of your comfort zone, because that's how you grow as a person and as a professional. And I would say number two, your network is your net worth. And what I mean by that is the people that you know, the people that you're connected with, the relationships that you have are far more valuable than any financial model or any investment, because those relationships are what you derive all of that from. And then the last thing that I would say is do not multitask. Multitasking is doing a bunch of stuff less than optimally. Really, prioritize your day and prioritize and schedule things appropriately, and really focus on the things that really push the ball forward. So those things. Don't be afraid to step out your comfort zone. In fact, embrace stepping outside of your comfort zone. Your network is your net worth. You should really focus on developing your network at all times. And then really just that's it.
Yeah. Love it. Great advice. All right. Well, thank you so much, Watson. It was really great to have you on. We really enjoyed the conversation and gained a lot of insights into this niche part of commercial real estate, especially in our current economic climate. So Thank you so much for your time.
Thank you. Take care.
Yeah, thank you, ladies. This is my first podcast.
Aww.
I'm so nervous.
I love it.
Won't be your last.
This is so awesome. I'm glad I did this.
Thank you.
Awesome.
Thanks. Take care.
That was Michael Watson sharing his insights on working with distressed asset management. For more information on Watson, SVN Vanguard, or to learn more about SVN Lattice, click the links in the show notes. Thanks for listening to Beyond the Deal.